Hello and welcome back to Mining Network. I'm with Keith Henderson, CEO of Latin Metals. Keith, good to see you.
Yeah, you too. Thanks very much.
No problem. Kick things off, brief company overview.
Briefly, we're a prospect generator in South America. We're a real prospect generator. We've got a very, very carefully considered business model, which we're following very strictly. We're all about protecting the shareholders. We're all about protecting the shareholders against the excessive dilution that they generally see from a typical mining company. And so we run really lean. We run the company about $1.5 million of financing every year, and that's it. And that covers everything, all of our offices, all of our people, and all of our activities, including our exploration. And then once our projects are ready and they've got drill targets ready and they're ready for a partner to come and take a look, we reach out to usually major or mid-tier mining companies. They come in and partner and they do all of the work essentially, so they cover the costs of exploration going forward, including the very expensive business of drilling. And then, if they're successful and they make a discovery, we've also got a retained interest in that. So it provides a lot of exposure to a lot of projects and a lot of upside for the shareholders without really incurring very much of the expenditure or the dilution that everyone hates to see. So.
Yeah, good. It's a model I'm very familiar with myself. It's almost similar to a royalty in a sense, but really it's way before that where you're getting like you said, the majors or the mid-tiers to really spend on the drilling, which is great. Just before we run into the projects, what's the capital structure as it stands at the moment? You were talking about burn rate there in terms of about 1.5 million a year. How much cash in the bank? I think you just did a raise recently, didn't you?
Yeah, we did. We do carefully follow a plan, and our plan was to raise money in October. The plan was not to raise money at 10 cents, but that's where we ended up doing it. It's one of those markets and one of those times when you just have to do it. So we've got money in the bank now for the next year. We got our 1.5 million. And we're ready to go in that sense, so that went okay for us. Yeah.
And what about shares outstanding, market cap, that sort of thing?
Fully diluted is a little under 90 million shares, and at the rate that we raise money, that's not going to change a great deal over the next couple of years, hopefully. Like, our plan ultimately is to become a self-sustaining company, which is a fairly tricky place to get to, but we're well on the way to doing so. So when we engage with major company partners, as well as committing to spend significant money on the ground, on exploration, they also commit to give us money every year, which is very helpful, and there's always money coming in. So this is what we love most about the prospect generator model. If you're a typical mining company, you're going to have one or two projects. You can fund those, and maybe they're successful, maybe they're not, but you've got a couple of chances of being successful. In our case, there's really no upper limit to how many projects we can have, because we don't spend significant money on any of them. Though we've got 15 projects at the minute, and we've got 3 really good partners. As we progress through the next couple of years, we're going to be acquiring more projects, we're going to be finding more partners, and they're all going to be giving us money, or else they're not going to be our partners. And eventually that gets to the point where, all of our financial needs are taken care of, and we don't have to go back to the market, which is the best possible place you can put a company like this in the marketplace. Is if people want to become shareholders, they actually have to go to the market and buy shares. It's just great.
How close are you to that being a reality in terms of having enough revenue coming in from your partners to purchase the new exploration licenses that you want to go after, do all the groundwork, and really find out whether it's something that you can then...
2 to 3 years.
2 to 3 years.
I think, yeah. It's hard to predict exactly, but that's where my prediction would be. Yeah.
Okay. And what's the structure usually look like with the project generator model that you're working on? Obviously, you'll get it up to what sort of stage? Pre-resource, I'd assume, but...
We don't do it.
You'll do some of the groundwork, some geophysics maybe?
Yeah, usually some geochemistry and some geophysics. We have some excellent databases, particularly in Peru, databases that we purchased some years ago. Those give us a bit of a competitive advantage in Peru, allows us to go and stake ground. And we always acquire by staking if possible, because it's just so cheap compared to trying to buy a property off somebody with unrealistic expectations about what it's worth. So we get properties, we have them 100% and they're cheap. And we take it from there, and it works beautifully. We never really go past geophysics. We never do any drilling. And this is where a lot of prospect generators fall down. They find a nice project, and they sit down as a board, and they go, this is way too good to give to a partner. We're going to drill it ourselves. And the next thing, they're raising $10 million, $15 million, and blow the company structure out of the water. So that's the rule. We're not doing it.
What type of deal structure does it look like in terms of, say, for example, the deal that you've done with Anglo Gold Ashanti or any of the other companies that you've worked with over the last few years? Yeah. How does their earning work typically, what percentage do you usually like to retain yourself, or does it convert into a royalty at the end? How do you set these up?
Yeah, so to finish, to get to the royalty question, they all include a provision where we can go to a royalty, and that's really there because if these companies find what they're looking for, like they're tier one companies, they're looking for tier one assets. AngloGold are looking for 5 to 10 million ounces. If they find something like that, there's no way we're hanging in for a minority interest, so we would go to a royalty, and that's a great place to be. Yeah. I'll use AngloGold as an example of the structure. So in their case, it's a two-phase process. So they've got an option to earn 70%. That 70%, they have to spend $10 million, and they also have to give us a couple of $1 million, so that's kind of helpful. Nice. Then once they get to that point, they look at what they've discovered, what their resources are, and they think, okay, they have an opportunity then to go to 75%. But to do that, they have to pay us some more money, so they have to pay us $4.60. Let's call it $5 just for convenience. $5 per ounce that they've discovered. Mm-hmm. And since they're looking for such a large deposit, that could be a very significant payday for us, and that could be really good non-dilutive cash coming in that sees us fully financed for many years if it were to happen. So that's really basically they provide us with a resource and they pay us for whatever ounces they find, and that's a beautiful way to do it. In the case of Barrick, it's a little bit different. They're coming in for 70, but they've got an option to go to 85, which is a bigger percentage, but to do that they have to provide us with a pre-feasibility study, and that's a very substantial study. Involves a hell of a lot of drilling, and it's an expensive study to get to, so higher percentage for a greater amount of work.
No, that's fine. What I have seen in the past is that companies will try and do a structure where, or majors might try and do a structure where they'll earn in, but you have to keep up, in terms of the percentage that you're keeping, you have to keep up the same requirements or ratio of payments. Is that, obviously that, in a sense, from what you're saying, would blow out your share structure, or could do if they find a deposit larger? I'm assuming that sort of clause isn't in there where you have to keep up payments at the same rate.
They cover 100% of the cost until they exercise the option, and then we have the choice: do we want to participate or do we not? And if we don't want to participate, we're going straight to a royalty, and that, in doing so, we can protect our structure, and it's in every deal.
Okay, can we run through a little bit of the projects that you have in Argentina at the moment? Because I believe in Argentina, that's the area where you've done the most deal flow so far, right?
Yeah, in general, the projects in Argentina are a little bit more advanced, and we've been able to get to partnerships on most of them through last year and this year. The projects in Peru are a bit earlier stage and just getting to the point where they're getting to partners. 3 projects in Argentina of significance that the partners are looking at. The first is Esperanza, which is a copper-gold porphyry system. This is one that was drilled last in 2018. When it was drilled, the best intersection was almost 400 meters at 0.55% copper and 0.27 grams gold. And in Q1 2018, that was the 3rd best copper intersection in the entire world. So it's a real discovery. And so that's one we watch very closely because, it's not grassroots. And when Libero Copper get to drilling that in Q1 or Q2 next year, you kind of know that they're going to come up with something. Maybe it's going to be that spectacular and maybe not, but they're going to be stepping out and they're going to be defining the size of that resource. And so that gives us a really good shot at getting nice news flow with really good results. AngloGold are in the north of Argentina. They're looking at a high sulfidation target, primarily for gold, but there's also some copper targets there too. As I said, they're looking for 5 to 10 million ounces. Are they going to be successful? Well, if we look around the world and see how many tier 1 assets there are, maybe not. You expect to see about 25 discoveries of that type in a 10-year period, and maybe they'll get one, maybe they won't. What's interesting for us is that if they don't quite get to their hurdle rate, like let's say they find 1 million, 1.5 million ounces, there's no way that's going to be enough for them to take the project forward. And we would hope at that time that they'd simply walk from the project and leave the resources with us, and that allows us to build our resource inventory as well, and just adds a little value to the company.
Well, we say that, obviously, like you said, Anglo, very common for having sort of 5 million ounce, especially in Ghana and places like that, where they're looking for these super mines. It's not a bad position to be in if you're left with 1 million, 2 million ounce deposit. If that is the case, what would the strategy be from there? Would you then look for a new partner to carry that on?
Yeah, 100%. Find a nice mid-tier company that would be very excited about 2 million ounces and who maybe sees a little bit more upside in that and thinks that they can add something to it, and we'd move straight into a great partnership with somebody else.
Are there any other mid-tiers already in that region in northern Argentina? Or?
Fortuna Silver are in there, First Quantum, maybe a little more than mid-tier, but yeah, there's some significant companies floating around as well as the major companies.
Okay, good. Okay, and then let's look at Peru as well. What it's earlier stage, but what work are you doing on the ground? What sort of potential are you seeing at the moment?
We took our databases, we identified projects that we wanted to acquire. Once we do that, we take another very important intermediary step, which is to look at communities, because communities in Peru can be really tricky. And frankly, there's some areas where communities just are not interested in working with mining companies. And so if that's the case, there's really no point in us getting involved with that. We haven't got 3 or 4 years to spend negotiating with the community, and we don't want to. It's really not a good place to be if the community is not interested. So we kind of filter by communities. We try to focus on targets where there's maybe only 1 or 2 communities with surface rights in the area. We tend to focus on the coastal belt where we know that communities are generally more supportive of mining compared to, say, the Amazon areas. So yeah, that gets us to areas where we can move pretty quickly, and from there it's geochemistry and geophysics and define targets as quickly as we can. Or lose the property as quickly as we can. If there's nothing there, we won't waste any time dropping the property and moving on to the next one. But so far, the things that we've picked up have worked out pretty well, and we think we'll be able to pick up partners this year.
Okay, good. That's actually a really interesting strategy, going after areas that you think will actually be permittable, or at least you'll be able to do some work on the ground. That's quite clever. What does the next year look like for Latin Metals? What are the key catalysts that you're expecting to arise? And maybe you can touch on some of the more advanced projects. What sort of news flow can we expect to see from those as well?
Well, we've got a pretty precise plan of what news we expect to be putting out. Not that we know the results, but we know the themes and when those things are going to happen for the most part. So we've got a plan for about 35 news releases for the year. The big things for us are the drilling starting at Esperanza with Libero, also with AngloGold and Barrick. We expect all 3 of those companies to be drilling by Q2 at the latest, possibly some of them in Q1. So there's going to be a lot of that kind of news coming. Drilling starting, results are coming out. This is all good stuff. And all of those deals give us quarterly data, so we get regular updates from those companies as to what the results are. So those are the really big catalysts. We've got some acquisitions that we're working on, both in Argentina and Peru, which we'll be announcing, assuming that we're able to close them. And then just our own results and hopefully finding partners as well. Like every time we find a partner, it's a significant event for the company. It speaks to 2 or 3 years of exploration and forward-looking stuff. It also speaks to money coming in that gets us closer to our goal of being self-sustaining and no more dilution situations. So yeah, it's good.
Good. Keith, thank you for your time.
Thank you very much. Cheers.